So in this video today, we are going to be answering the question of how much money do you need to have invested in order to live off of the dividends? Now, most people invest in the stock market as a means for retirement income. So when they reach a certain age and they don't want to work anymore, they are able to draw a percentage from that account. And when you combine that with Social Security and maybe some other type of retirement pension from their job, that should, in theory, be enough to sustain you for the rest of your life. But there's a whole movement of people out there that are taking a more radical approach to this equation, and in particular, this is called the FIRE community, or Financially Independent Retire Early. And these are people who are looking to retire at a much earlier age and live off of dividend income. So that's what we're going to talk about in this video today, guys, is how much money you need to have invested to be one of these people. And obviously, guys, this goes without saying, I am not a financial advisor. This is not financial advice, and this is just for entertainment purposes only. But that being said, if you're excited about dividends and potentially living off of this income, do me one quick favor and drop a like on this video just to show your support. That being said, let's get into the video. All right, see what I did there? I'm in a different chair now. Where's my like? But first of all, for those who are not familiar, let's talk about what a dividend actually is. So a dividend is a way that a large company can share a portion of those company earnings with the shareholders. So let's take Coca-Cola, for example. They've been paying quarterly dividends since the year 1920. So if you own shares of Coca-Cola stock, for every one share that you own, you earn 40 cents of dividend income per quarter, and that is them sharing a portion of Coca-Cola's earnings with the shareholders. Now, what's more impressive is that these companies try to grow these dividends over time, and this is called the company's dividend growth streak. Coca-Cola having a very impressive 55-year dividend growth streak. So every single year for the last 55 years, Coca-Cola has grown and paid that dividend. Now, most companies out there and most investment funds are going to pay dividends on a quarterly basis. However, there are some oddballs out there like Walt Disney stock that pays an annual dividend, or you have Realty Income that pays a monthly dividend. But for the most part, you should anticipate a quarterly dividend from an investment that pays a dividend. Now, some people take that dividend and reinvest it, which is the smart thing to do if you're looking to grow your money, as that allows you to earn compound interest. If you want to learn more on that topic, guys, check out that video in the corner. Other people, for example, who are retired, may take that dividend income and use that money to live off of, which is exactly what we're talking about in this video here. All right, so now what I want to talk about is how people actually earn dividends, and it's typically one of two different approaches. The first approach is the more passive investing approach, and that is where you are investing in what is called an index fund, or some people will accomplish this through a mutual fund. But essentially what that is a collection of, in some cases, hundreds of different companies. So rather than investing in one particular dividend stock, you invest in hundreds of dividend stocks through this fund, and then that fund as a whole pays out a quarterly dividend. So one popular example out there of one of these funds is the Vanguard High Dividend Yield ETF, which pays around a 3% dividend yield. And this fund holds over 400 different companies that pay high dividends. Now, the advantage to this approach is that you are well diversified across 400 different companies. So if one company in particular or a couple of them cut their dividend or eliminate it, well, you're not going to be in as much trouble as you would be if you own that stock directly. And the other advantage to that is you don't have to spend time, researching investments, listening to earnings reports. You can literally just toss your money into this fund, dollar cost average, and just do nothing after that, and then collectively earn your dividends from these hundreds of different dividend companies. Now, the second method for doing this is where you invest in individual dividend paying stocks. So rather than investing in a fund of hundreds of different companies, you pick a handful of companies that you personally want to invest in, and then you take those dividends and either reinvest them, or eventually you may live off of that as your source of income. So for example, a couple of popular dividend stocks right now are AT&T, which pays around a 5% dividend yield, Southern Company, which pays around a 3.75% yield, ExxonMobil, which pays around a 5% dividend yield. And so what you may find is that it's possible to build a dividend stock portfolio with a collective dividend yield of 4 to 5%. Now, most people would not recommend that because you want to have a mix of both growth dividend stocks and more well-established dividend companies, because there's always that risk of companies cutting or eliminating that dividend. General Electric. Sorry about that. I had something caught in my throat there. Anyways, that fund we talked about earlier, that Vanguard fund, pays around a 3.2% dividend yield. So some people looking for a higher yield from their dividend stocks will instead build a dividend stock portfolio and maybe find that they can build a portfolio with a 4 to 5% yield. However, this is higher risk because you're not diversified across many different stocks. You just have a handful of them in your portfolio. Now what I want to talk about is what is the average income that we are looking to replace with dividends. And obviously guys, this should go without saying, but I'm going to say it anyway. It would be a lot easier to replace your monthly income with dividend income if you needed, let's say, $2,000 of monthly income versus $20,000. And most people who follow this FIRE movement live on a very small amount of money, in some cases something like, $1,500 to $2,000 per month. So the less money that you spend, the easier it is to replace that money with dividend income. But what we're going to do for this video is use the average salary out there for a single person, because let's be honest guys, if you're trying to replace your income with a family, good luck with that, okay? So let's assume that you're single and you're looking to replace your income with dividend income instead. Well, in 2017, the average salary was $61,372, so we're going to go with that figure. And it's actually a pretty simple calculation to figure out how much money you need in dividend stocks roughly to replace that income. Now this is assuming that that dividend yield does not change, and as we're going to discuss later on, that dividend yield can in fact change. But assuming it does not change, the way you would figure this out is you would take the income you're looking to replace and divide it by your dividend yield that you anticipate earning. So for example, that Vanguard ETF we talked about pays a dividend yield of 3.19%. So we would take $61,372 divided by 0.0319, and that tells us we would need $1,923,887.15 invested in that ETF, earning a 3.19% dividend yield to earn just about $62,000 per year in dividend income. Now let's assume you follow the second approach and instead of investing in a fund, you build a dividend stock portfolio with a higher yield of 4.5%. Well, again, you take that salary number or the number you're looking to replace, divide that by your anticipated yield. So if we divide that out, we end up with a number here of $1,363,822.22 to earn, again, roughly $62,000 per year of dividend income. So short answer here, you need like $1 to $2 million invested to earn a basic salary from dividend income. All right, so now let's answer the question of how much of your dividend income do you have to give over to the government? Yes, let's talk about taxes, all right? So here's the thing. There are two different types of dividends out there, and this brings you down a complicated rabbit hole of, jargon that really your tax advisor and your financial advisor are the only people who really understand that. But we have both a qualified dividend and an ordinary dividend. So ordinary dividends are pretty simple because this is just money that is being paid out from the earnings of a company, and it's called an ordinary dividend because it gets taxed as ordinary income. So essentially the same rate that you pay for taxes at your job. On the other hand, you have something called a qualified dividend, which is earnings paid out from a company that meets the following requirements. First of all, the dividend must be paid by a U.S. company or a qualifying foreign entity. Second of all, the dividends are not listed with the IRS as those that do not qualify. Now, a couple of examples of popular dividend stocks that don't qualify by IRS standards are MLPs, or a Master Limited Partnership, or a REIT, which is a real estate investment trust. Now, what we're getting at here is that these qualified dividends are taxed at a lower tax rate. So it is an advantage where you can basically have more income from these dividend stocks than you would from the income from your job because you're taxed at a lower tax rate. All right, and the third and final requirement here for a qualified dividend is that the holding period is met. Now, that holding period explanation is extremely complicated, but in most cases, it is a 60 to 90 day holding period. So most long-term dividend investors, unless you're investing in an MLP or a REIT or a non-qualifying company, then you are in fact earning qualified dividends which are taxed at a lower tax rate. And that tax rate is either 20%, 15%, or 0%, depending on how much money you make. So if you're in the higher tax brackets or the very bottom ones, it can save you a significant amount of money on taxes by having qualified dividends instead of ordinary dividends. And because of this lower tax bracket, you may not need as much money as you thought you would in order to live off of dividends. But wait a second, guys, I do have to burst your bubble here. There are a couple of problems with trying to live off of dividend income, and I want to get into those right now. First of all, we have something called inflation, which is the general increase in prices of things over time. Now, as we said earlier, companies try to increase their dividends over time, but there's no guarantee of this, and there's also no guarantee that the dividend increase will outpace inflation. So that being said, the buying power of your money could deteriorate, and $60,000 today will not buy the same amount of goods or products or services as $60,000 in 30 years. Another big problem is that dividends themselves are not guaranteed. So companies tend to pay dividends consistently and grow them consistently, as that keeps shareholders around. But during bad economic conditions or a company falling under financial hardship, they can cut or eliminate that dividend at any time. For example, I know I mentioned it earlier, General Electric used to be a high-yielding dividend stock, and then there was a change in the CEO. The company was doing terribly financially, and the new CEO slashed their dividend down to just 1 penny per share. So they went from a high-yielding dividend stock of above 5% to a company that barely pays a dividend at all. So if you followed this strategy and invested a boatload of money in GE, and then all of a sudden your dividend income disappeared, well then you would be in some trouble. And there's another issue here. As much as people complain about their jobs, they do supply you with some pretty useful stuff. One of these things being health insurance. Because if you were living off of your dividend income, you would essentially be unemployed and you wouldn't have health insurance through your job. So you would have to pay for your own policy, which could cost you, for a single person, $500 to $1,000 per month. And there's also a lot of other reasons why this is not an exact science or necessarily the best strategy to follow. But the last one I want to cover here is that a job will also provide you with a consistent payment of weekly or bi-weekly payments in most cases. Dividend stocks, on the other hand, pay dividends on a quarterly basis. So if you, for example, invested in a dividend fund, you would earn 4 paychecks per year, and you would have to manage that money well and spread it out over those 13-week periods. Now, for some people, that wouldn't be an issue, but for a lot of people, if you handed them a check for, $15,000, they may spend that on things that they wouldn't ordinarily spend it on just because they see how much money they have, even though that would have to last them for many weeks. So living off of dividends isn't all it's cracked up to be, as you guys can see. So what I want to share with you right now is what I believe to be a better strategy. Rather than living off of dividends, it's this idea of eventually supplementing your income with dividends. Because this idea of having enough dividend income to retire in your 30s, while it is possible, it's kind of a long shot. But the idea of building $500 a month of passive dividend income in your 30s, now that's a much more attainable goal and something that is going to be much easier to accomplish. Because as you understand now, living off of dividend income is not an exact science. And there are many factors that can affect your level of income when you are living off of dividends. And the other thing we have to mention here is that doing nothing all day would honestly be extremely boring. I can tell you guys this from firsthand experience. I've taken time off where, I'll go on a vacation and I'll do nothing. And by the third day, I am literally bored out of my mind. So the idea of living off of dividend income, never working again, and sitting on the beach and drinking, Malibu Bay Breeze, that sounds like a great idea until you actually try it and you realize that it sucks and nobody would actually want to do that. So instead of having that goal in mind, I think a better goal is to reinvest your dividends in your 20s and 30s and then supplement your income later in life, maybe with that dividend income. Because for most people, $500 per month in dividend income, that's a substantial amount of money, and that could be huge for whatever your goals are long term. So anyways, guys, that is my video here. I hope you enjoyed it. If you're new to the channel, make sure you subscribe. And if you want to learn more about dividend investing, like I said, I have a portfolio through M1 Finance where I'm building up a $100,000 dividend stock portfolio, and I'm reinvesting those dividends to earn that compound interest. If you want to check out that video, I'll pop a card up in the corner, or there's a link down in the description below. I personally invest through M1 Finance. It's a commission-free brokerage that has portfolio-level dividend reinvestment, automated portfolio rebalancing, and a lot of awesome features. I'll drop a link to them down in the description below as well if you want to check them out. Full transparency, I am affiliated with M1 Finance, so I do earn a small commission if you use my link. But thanks so much for watching. I hope to see you in the next video. See you then.